Hello everyone, and welcome to this session, and thank you so much for taking the time to come and join me. What I want to do in this session is to have a look at some of the slower time frames, in particular the weekly and the monthly, especially as we've just had month end and we're just moving into, it's just started the new trading month. But before we start, as always, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I want to go straight away to FinViz, because the chart that I want to have a look at today is actually the XLE. I have featured this particular ETF. It's the ETF for the energy sector. There's a couple of videos that I've done previously on that, and I've actually written about it on my website. That's annacouling.com. In part because energy has been the outstanding sector for some considerable time, except for the last day and the last week. And with FinViz, what it does, it's a fantastic a website. It gives you all sorts of information about stocks and other markets as well. But more importantly, it can tell us which sectors are actually moving on a daily, weekly, monthly, year-end basis. And what I've got here is I've pulled up the obviously what's been happening today. I don't want to focus on the day and the week. I just want to recap what energy has been doing, certainly really for the last year, and the extent to which it has outperformed and is okay. It's had a bit of a pullback at the moment, and when we look at the charts of the XLE, especially on the slower time frames, you'll probably be able to see why that is so. But you can see here a month, 3 months, half year, 1 year, and year to date, it's up sort of 43.8%. It's phenomenal. Consumer cyclical is down minus 24. There is a reason partly for that. The XLE, I won't go into the actual constituents and the weightings of the ETF, but it is very heavily weighted towards oil stocks. And of course, you look at the price of oil at the moment, and you can see why, it has performed as well as it has done. So that's FinViz. I can't recommend it highly enough. This is the paid version. There is a free version. You will have to put up with the ads that appear on your screen, but when you're starting and you want to save some money, it's well worth it. They're not that annoying, as it were, but after a time, when you really want to get into stock trading and investing, you're going to have to find some kind of screening system, a site, and certainly I think FinViz, I can't recommend them highly enough. They're not the only ones I use, but it's certainly one of the ones that we are going to be suggesting in our upcoming stock trading and investing program, certainly because, as I said, it is free to start with, and then you come out. And I think what I paid for this, I think it's less than $300 for the year, so it's really not a lot of money for what you actually get. Okay, let me pull that down. And as I said, obviously month end we've just had, it's only day 2 of the new trading month, and it's always well worthwhile, whatever you're trading, doesn't matter whether it's an ETF or whether it's a futures or a stock or an index. Go back and have a look at what is the monthly candle telling you? What is the weekly candle telling you? What is the volume telling you? Because it can really give some quite good pointers as to what may be coming up ahead. And as I said, the reason I've chosen the XLE, one reason is because it's been such a strong sector, and when things are moving so strongly for so long, of course people are saying, well, when's it going to turn? Is it now, have we now reached the top? And of course markets can stay overbought, if you like, or they can keep on going higher, a lot longer than possibly some of us can stay solvent, and they can sell off, a lot longer than we anticipate or hope there's always hope when things are selling off strongly. Anyway, this is the monthly chart for the XLE. And of course here, this is last month's candle. And I really want to have a look at it, obviously also in association with what the volume is beneath that candle. But the first thing to notice is that we have these two little purple arrows atop and the bottom of the candle. Now this is an indicator that my husband David and I have developed. In fact, all the indicators, proprietary indicators you see on this chart, are ones that we've developed for ourselves and are available from quantumtrading.com. I know some of you who watch these videos are already invested in the indicator, so it's always lovely to have you join us for these sessions. What this little when this indicator is triggered, these are these two little purple arrows that you see here. You can see them. You can see it on this candle here. You see here. What has happened is it's telling us that the range of this candle is outside of its average true range for this particular time frame, which is obviously the monthly chart. Now, volatility, we measure volatility in two ways. We measure it either with average true range or a standard deviation. On this case, we use ATR. And what happens, volatility, first of all, is non-directional. Volatility is a sudden burst of energy. It's the speed, it's the rate of change, if you like, when something is either moving up or moving down, which is fine. Volatility, as traders, we want volatility. We don't want to be stuck in something that is in the doldrums. It just inches along. We want volatility, but volatility, prices being racked about, pulled up and then shoved down again, is also used by the market makers basically to trap traders, because when we see fast moving markets, as traders, we can't help but thinking, oh my goodness, I really want to be in that move. I really want, and we sit back and we wait and wait and wait. And then usually what happens, by the time we get into that move, the move is actually over. So if you have an indicator that tells you that volatility is underway, I said this is on the monthly chart, but this works on all time frames, and it suddenly fires off. You say, first of all, it tells you obviously things are moving, but it also tells you, okay, what is now going to happen next? Yes, you can get a follow through. It does happen. But more often than not, what tends to happen is, because you've had so much momentum, so much energy going into that move, what tends to happen is that the price then pulls back, and it pulls back into what we call the spread of the candle. If I just pull that out a little bit more, you can see. So as I said, this is the monthly chart, but you'll see this on all the time frames. This is last month. Obviously, it went up, it pulled back a little bit. Now we do have a little wick to the bottom, to the top of the candle, so we would expect, the price to come back. But the classic is the first step when this indicator fires, or when you have volatility. Even if you don't have the indicator per se, you can see this, and I'll show you an example of that. Actually, I've got AMC, which is a fantastic example. The price then retreats to within the spread of that candle. Everything has to die down, as it were. Then one of two, if there's no follow through, then you have one or two things happen. You either get a sort of sideways, a consolidation within the spread of the candle. So essentially, we've had the big move higher. You've had this burst of energy. It goes back into the spread of the candle, and then it just sort of, I wouldn't say it drifts, but it just, it stays within the range of this candle. This candle, the high and the low of the candle, then become very important points of resistance and support. Or what can also happen is you actually get a complete reversal, and again, that's much more happens much more when it is an out and out trap move. You see them almost every day in the forex markets, particularly at the London Open. You see prices sort of shoot up, the indicator is triggered, and then almost immediately, bam, it goes, it reverses, it just turns around 180 degrees. Not so much in stocks, I would have said. You do get this consolidation, and then you'd have to wait to see whether the low is taken out, if it reverses, or if it's going to carry on higher and it's going to be pushed higher, which is perfectly feasible. Whether that is going to go higher or not is really going to be determined on the volume, because if we look at this candle, which was, as I said, it had volatility because of the range of the candle, your eye is immediately drawn to the volume that accompanied this candle. And to be honest, it doesn't look that fantastic when you compare it to this candle, which is not such a wide range, and it's actually got very, I would say slightly higher volume. And you would say, well, okay, the price has been pushed up, and yet you would expect to have much more volume than it actually has. So that of itself would perhaps tell you that maybe, at the very least, this ETF, what is happening in the energy sector, possibly we are going to get certainly a pullback, a correction. I'm not saying it's going to be a reversal, but because there's no consistency between the range of the candle and the volume, it kind of pulls up a red flag. And maybe the investors who have waited on the sidelines, waiting, say, oh, do you think energy is going to keep going up? Oh, well, I might as well get in now. They've now got in at possibly not an optimum time, as it were. And if we look at the weekly candle here, it's even more, the VPA signals are even stronger, the anomalies are even greater, as it were. So if we look at last week's candle, and you look at the range of that candle, and you look at the volume underneath it, you think, yes, really, that's not healthy, as it were. With regard to where this, if it's prices still can go higher, even though volume, maybe not, maybe light, as it were, they can get marked up higher. If we go back to the monthly chart, because obviously, I know we've had the volatility, but possibly where's it going to go? Where's it going to go to? Well, this is where your previous highs and lows come in, and here we're at about 100. So despite this, despite the volatility candle, despite the sort of what I call lightweight volume, as it were, even on the weekly chart, if this carries on higher, then this is the next sort of logical stopping point, as it were, which is the high from 2014. There we are. From the sort of fundamental perspective, as I said, this ETF, the two biggest weightings are the two very big oil companies. We then have to keep a watch of what is happening on the oil price. This is the July contract for the WTI. And interestingly, this is also going higher, but again, it's kind of on falling volume. And what we also have, two volatility candles, and it's now, the current price is within the spread of this one. It did fall out, it's gone back in. So the high of this candle is absolutely critical for oil. All I would say is, I believe OPEC did say they were going to start releasing, ramping up production, pushing more supply into the market. Obviously, the situation with Russia and Ukraine, with Russian oil not being so freely available, has clearly had an impact. I don't believe that has happened yet, so that's part of the reasons why prices are still going higher. But the volume is certainly falling. I don't think I don't think this is going to go. Well, certainly, the high of this volatility candle here, that is a potential target. But if the supply does come into the market, then you can see why. the XLE and the WTI have possibly reached a significant pause point. But the clues are in the volume price analysis, and that is the relationship between the price action and the volume, particularly on the slower time frames. As I said, I just urge you to go and always have a look at the monthly candles. It doesn't matter whether you trade, the faster time frames, just see what the structure of the chart is, because it will tell you, it has this, if it's been in an uptrend, is there more room for this, for the move to go higher? And if it is going to go higher, look at the levels. Look back over to the left of the chart and just see, there's always scope for it to go higher, then where is it going to get capped next? And that will also give you some indication of that, if it is going to go higher, where is it likely to stop? Now, what I said at the beginning is that I'd have a look at AMC, because we had some fantastic examples of volatility, volume, and trap moves, as it were. And this is the weekly. I thought the weekly chart was just absolutely brilliant. And with AMC, if I just pull it all the way back, we had a classic case of where the stock really didn't do anything. Then we had the volume coming in, and it was with volatility as well. If you have what I'm going to say about volatility and volume, if you have a volatile candle, in other words, it's outside of the average true range, without a great big wick to the top of the candle, with a ton of volume underneath it, well, that's actually quite positive. It's when you get this this disconnect, if you like. You've got a lot of volume underneath it, but you've got a big wick to the top of the candle. So just in candle volume relationship, that's going to tell you the chances are there's weakness has come into this candle. But you get all that volume going in. The next candle, as I said, the first action, particularly when there's a wick to the top of this of an up candle, you've got it go. The price action goes into the spread of the candle, and in fact moves, as you can see here, it kind of reverses, but doesn't reverse out of the spread of the candle. It moves a little bit sideways and then starts to move higher. We also have here the volume point of control. This is where this congestion, this is the point of the chart where we had this congestion. It's also, at the time, I would have said, it's kind of fair value. There was no strong bias. Yes, we'd had this push higher, but it retreated, and the price just simply moved sideways. And you can see also the volumes all die down. In congestion phases, volume tends to do that. It just tends to sort of die away, as I said, because there's no firm direction one way or another. Then we have, then the volume starts to come in again. It comes under this candle here. We have a little down candle. The volume point of control then becomes a good support platform. All this is a very strong support platform. It's price based, but it's also volume based. And then you have these two. Then you have this. This is like a shooting star, basically. Up it goes. It has. There is a wick to the bottom, to the top of that candle. That's the volume. Okay. What happens with the next candle? It does go back into the spread of that candle, but look at the volume and look at the spread of this candle. Even with the wick to the top, it's massive, but the volume is identical. So that is, if that isn't a trap move, I really don't know what is. And then we get the classic, once that's happened, price goes into the spread. We actually get a volatility within the volatility, which is fine. It's almost like I wouldn't say quite a doji, not a huge amount of volume underneath it, but the price carries on. And then it gradually falls. And this is what I'm saying. Price can go up, even though there isn't, the amount of volume that you would expect to validate that price higher. Again, I would take that as as a trap move, basically. If you were watching this and maybe you'd missed all this for whatever reason, then it retreats and it falls, and oh great, maybe at that point, it's a good time to get in. You're sucked back in, and then bang, down it goes, and it goes down quite a long way, but it's still within the spread of this volatility candle. This is actually, it's it is sideways, the big ranging candles, but it is sideways movement. And really the break, if you like, as I said, the highs and lows of volatility candles become really important support and resistance levels of themselves, and then it sort of falls. And where does it fall back to? It falls back to the volume point of control, where it's actually provided some support, another volatility candle. This is, like a shooting star. The volume here, you think, well, that's not very much. You have to remember there are, I don't know, the millions and millions that goes into AMC. You can check it out on FinViz. This is massive. This is a lot as well, but in comparison with that, that's why it's squashed down a little bit. But you've got a lot of weakness to that candle, and then down it goes. And fortunately for AMC, the volume point of control is actually providing a really strong platform. If it holds, there is no reason why that cannot carry on higher. Just to finish it off and see what the monthly is telling us, if I move to the monthly, hopefully that will change quickly. Yeah, and we've actually got the volume point of control at the same point on the monthly chart, and again it is providing some support. Now if that does fall, if that does break and it doesn't hold, then we have a look at some levels. We may actually get a fall in also, in the volatility, because this is a very dense area of volume support, and prices tend to, so it's what we call a high volume node. So prices tend to slow down a little bit. So that will also help to cushion, if you like, any pullback or correction. I've actually got some pivots on here. These are Camarilla pivots, and we've got the S3. In fact, if I put my little box up, we can actually see the data box. We can see what the precise ones. So where are we here? We are at $8.16. So certainly, if that doesn't hold, then we've got $8.16, and we've got the low of this volatility candle, which is about the S3. The lows of these candles are really, really important. And then right down here, what are we back down to? 267. We just have to wait and see. And if it holds up. Last month it actually fell. It fell down to $10, but buying came in, as we can see from the wick of the candle, pushed it back over the volume point of control, and it's now the markets are not that fantastic. I know they've had a bit of a bounce today, so really this level has to hold. What isn't very encouraging for AMC is, I don't know whether you can see this, let me just pull that, here we are. This hatch line here, this is from our accumulation and distribution indicator. It's a price-based support and resistance indicator. This is quite, you can see it's quite a thick line. What happens with this indicator, the more a level is tested, then the stronger it becomes, and the lines actually thicken. So it's, you've got some strong resistance. You've also got a little channel here between this resistance and the volume point of control. So it may simply move sideways. I don't know, what's with June. Our market's going to have a, this bounce that we're seeing at the moment. Is it going to carry on? Well, we have non-farm payroll tomorrow. Who knows? You have to let this week go by, and probably by next week we may have a better idea of whether what we're seeing at the moment is just a bear rally, and in fact the downward trend will continue, or it will, the markets find a natural base, and they don't really do very much because they're a bit sort of rudderless. They're a bit, there's lack of direction. We've been very spoiled with some fantastic moves, both to the upside and the downside. It's almost, we've kind of forgotten what it's like when markets don't do very much. But it's just something that we will have to wait and see. I'm sure the central banks, that's what they would prefer. They would prefer markets, to go up a bit, down a bit, and not have this kind of volatility that we have seen. I mean, obviously things like inflation, the war, the price of oil, as we've seen in the they're all going to have, play a part in what is going to be coming up in the next few weeks and months. All I would say about inflation and even rising interest rates, I mentioned it on I think on one of my Facebook posts, but markets do go up, have gone up, while interest rates have been going up, but it's the rate at which they go up. There are commentators out there who have said the Fed should be, ramping up interest rates 1.5%, with the threat of inflation, kill it off now, get rid of it, and everything, it's like ripping off a plaster. Do it now, do it once, and what have you. But as I said, next time I do one of these videos, I will actually find there's been a period where interest rates were rising, markets continued to rise, but it's the reason the markets carried on higher was because the rate at which interest rates were going up was actually quite measured. And it's the market can cope with that. They think, okay, and wages didn't get out of control, as it were. So it's all a bit sort of, you think, like Goldilocks. No one likes things too hot. No one likes things too cold. They just like it just so. As I said, just like Goldilocks. So thank you so much for coming along and watching. I hope you've enjoyed this video and you've learned something maybe that you did not know before. Before I just go, the indicators that I mentioned are at quantumtrading.com. Obviously I was using the NinjaTrader ones, but they're also available for TradeStation, TradingView and MetaTrader 4 and 5. So as I said, thanks again, and I will catch you next time.